G'day guys and welcome to the weekly VEMA Trader market analysis. My name is Rhys and today I'm going to be running you through my thoughts on Bitcoin. So if you're wondering why it did what it did last week, where it could potentially be going for the week ahead or even the month ahead, and how professional traders like myself can make money and capitalize on those moves, then this is a great video for you. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so here we are within VEMA Trader. Now, normally what we like to do is take a look at the trades that we had set up last week, see how they played out, see if there's anything we can learn from them. But I didn't set any trades up last week because I didn't like the look of the market, and I spoke about that in that video. So I thought what I'd do instead is just take a quick look at what did happen last week, and then I'll get stuck into what I think may be coming in the week ahead. So when we were looking at the charts last week, Bitcoin was on, it was forming this candle here. So it was the daily close, the candle after it was the one that we were watching, and that was on the 9th of May. Now, I was saying at the time that the fact we're eating through that 34k zone really had me feeling quite bearish, along with, my daily bias and a lot of other things. And so I thought, there was a chance for a retracement, for a bit of a buy up, because the market it can go down forever. Anyone who's watching Luna will have seen the market go down almost permanently. But typically it'll come down and then head up, and then come down and then head up. So, sort of not expecting that move up, but was definitely considering it was a possibility. But the fact we're eating into that zone did make me quite bearish, and sure enough, we tanked and we got to that 30k level that I've been talking about. So that was really good for me personally to see, because I've been talking about that 30k level for weeks, if not months, and so to get the vindication, I guess, that that was where price was heading after the breakdown of that bear flag and after all those things was quite nice. Even though didn't make any money off the trades that we had set up because we hadn't set any up, it's always good to sort of get that feeling of, the market is making sense to me. The market's moving in a way that does make sense to me. It can really help your confidence with your TA, plus, bragging rights is the main reason that anyone trades, so it's always good for that. In terms of what happened, we got a really nice bounce off that daily zone, right? You can see that held on the first push. We came into the daily zone, we pushed back up, we closed above it. But then we came down to that 4-hour zone, and this is why I'm such a big fan of refining your zones, because like I spoke about last week, or if I didn't last week, I've definitely spoken about it before. If we'd taken the trade purely off the daily zone, 1.65 to 1 risk reward. If we use the 4-hour zone, all of a sudden you're doubling that and getting to 3.5. I'm a huge fan of refining your zones, and what I mean by refining is taking a bigger zone and then looking for a smaller time frame zone within it where you think price might hold. And you can see that 4-hour zone held really nicely. It was actually the first place we saw really any buying after the entire move down, right? There was really no buying through here. It was more just a little bit of consolidation, holding up price, not really reversing price. Now, that wasn't a reversal, but it was actually somewhat of a bounce for the first time in a really long time. It was a really small bounce, but that 4-hour zone, it was good to see that hold. Shortly after that, I've said multiple times, if price is consolidating at support, it's often bearish. Shortly after that, we consolidated for a little bit, and then we tanked straight through that zone. So that's pretty much what played out last week. What we'll do is we will reset this chart, we'll start from scratch, and then we'll see what we can see for the week ahead. Alright, so on the weekly, we finally have something to report. The weekly zone that we've been looking at for, I think since I started these videos in March. So yeah, the entire time that we've been recording these videos, this weekly demand zone has been kind of the key zone on the weeklies. That zone is now bust, right? We have pierced that zone completely and quite solidly, not just a little wick through. That has gone quite a long way through. That zone now does not exist. So the next weekly zone that we're looking at, and I think I spoke about this last week, if not, forgive me, but my next weekly zone is that pause zone there and that pause zone there. They're kind of stacked like that. So, you can just draw them as one big zone, however you want to do it. I always like to do it as the two separate ones. But that's kind of my next important demand zone on the weekly. That is that 20k level. And, it is a long way from current price. We're at 30k, but on the weekly, there's really no reason to expect buying support until we get down there, in my opinion. So that's the level that I'm looking at now on the weeklies. In terms of the candle itself, kind of bearish, kind of bullish, right? That is a big buy up. That wick shows that price got pushed down a long way and then bought back up. But it's still pretty solidly, the body of the candle is still quite solidly bearish. And the fact that we ate that demand zone, now there's really but the next buying support is down around that 20k level. So, do I think we're heading straight down there? Not really. It's kind of similar to last week, right? How we're looking at the 4-hour. It's kind of due for a correction, but due is not something you want to trade based on, right? It's kind of a fallacy. You hear about the gambler's fallacy. That's kind of thinking something is due for retracement is a similar mindset. And so, kind of not surprised to see a pullback, not surprised to see price continue on down to 20. I'd be surprised to see it hit 20 this week, but I do not think 20k is off the cards. So that's my thoughts on the weekly. We'll take a look at the daily. All right, so on the dailies, things still are quite bearish to me. We formed a massive lower low, right? We broke these lows, formed a big old lower low. There was a demand zone about 26k that we went through. So this one here, quite a weak zone, right? It's just a bit of a pause, and it'd be quite a small zone, but we've pierced that completely. I'll show that when we go back. And so the next zone that I'm looking at is this sort of consolidation. Again, pause zone, not a pivot, but I would give this more strength than that. That was quite a weak, even pause. This is a bit more of a longer pause, so potentially a bit of a stronger zone. If we head back to current price, you'll see what I mean. So yeah, when we came down to about 25, we ate the entirety of that 26k zone. So that is now gone from my chart. And so the next zone I'm looking at is that $24,000 level. What makes me bearish on the daily, other than the fact we just formed a lower low, is there's quite a lot of resistance overhead. So this 34k EQ that I've got marked off, to me, is quite a solid EQ, right? If you put it on the line chart, it's really easy to see. It's held multiple times. After this huge sell-off, sorry, that was terrible. That huge sell-off, that was where we held, right? Those are all wicks. You can see we constantly bought back up above 34k. After that huge sell-off, that was where we held. We bounced, we retested, and then we pushed again. So to me, that 34k level is quite a strong EQ. The fact we're now under that, I think is a bad sign for Bitcoin. Bad's relative, right? I'm quite happy we're under that. I'm quite happy to be buying at low prices, or what I consider to be low prices. But in terms of Bitcoin, you probably want the price to get, or Bitcoin probably wants its own price to go up if Bitcoin was sentient. And so when I say bad for Bitcoin, I essentially mean, I expected to see more downside. So that 34k level lines up really nicely with the 38 fib. I'm not a huge fan of the 38 fib. I much prefer the 50 and the 61.8, but I can't deny that that lines up quite nicely. And so a move like that, so if we hit the 38, I would still expect to see some buying pressure around 24, but for anyone who's familiar with Donnie's springboard analogy, only getting back to 38 on this retracement would be quite bearish. I'd probably be more expecting to see 20k hit than if we came, right back up to the 61.8 and then came back down here. I would think 24 might have a better chance of holding. If we do break through the 38 fib, there's quite a lot of potential resistance up in this sort of 40 to 42k region. So what I'm looking at there is, is this supply zone that led to the huge drop, and the EQ zone at sort of 37k that lines up really nicely with the bottom of that zone, and then the 61.8 fib of this move down. Now with the fibs, they are subject to change because we haven't formed a real key pivot here. So price might continue down, and then I would sort of just be extending my fibs, but for now that's the best I can do. That is the current pivot, that's what I'm looking at. In terms of, am I seeing anything that makes me bullish? Not really. There was a decent buy up on this candle from 25k, but the following three candles have been really weak, in my opinion. We had a bear hammer following that buy up, and then we've had a small bullish engulfing, a small bullish engulfing, and now we're looking quite bearish on the current candle. Now the current candle still has about an hour and a half to go, so things could change, but currently that looks like quite a weak recovery to me. So if I had to pick targets on the daily, I'm really looking at that 24k level. Even if we do get that retracement, there's nothing that makes me super bullish on the daily at the moment. Righto, so looking at the 4 hour, again, really not seeing anything that makes me feel bullish. In fact, I feel even worse about this recovery on the 4 hour than I did on the daily. It's just quite weak. We formed a lower low. We've now formed a higher low. We're probably on the hourly in terms of how I think about market structure, but you could definitely say there's a valid 4 hour higher low, and then a higher high. Again, for me, that would probably be like an hourly higher high, not a 4 hourly, but we did break that high. So that's bullish, to some extent. But really, price is being held quite solidly in this region. We'll make that the 4-hour color, which is currently white. You know, even if we do break that 38 level and that EQ that I was speaking about lines up really nicely with a supply zone. Then there's also a supply zone that lines up really nicely with 50 fib, and then one that lines up beautifully with the 61.8 fib. Now there are other supply zones in there, so there's potentially a supply zone here. I haven't bothered marking that off because I wouldn't take a trade from there. Just that supply zone in isolation is not enough for me to take a trade. So even though it's not an irrelevant level, because price may get held there, it's not a level that's any use to me in terms of my trading. So I'm just going to ignore that level. I'll get rid of that EQ. So yeah, again, on the 4-hour, nothing really changes for me, apart from probably makes me slightly more bearish. So we also have this demand zone, right, that we formed at the pivot. But I feel like that's quite a weak zone because the buy up from it was quite weak. So, you know, I wouldn't be super confident in that zone holding if price came back down there. So yeah, again, really sort of looking at that 24K level for price to head. And finally, we come to the trade setups for the week. So these are like my favorite kind of setups. These are like my bread and butter, right? Fibs, supply zones, EQ levels, all lining up, all agreeing with my high time frame bias, right? My high time frame bias is bearish. Hopefully you picked that up by the fact I have 100 bearish things to say and very few bullish. The fact these are all short. Love it, love it, love it. Big fan of the trades for this week. So they're all pretty similar. So what I'll do is I'll just run through one. The only thing that changes is like 2 tags in terms of how they're set up. They're basically identical. So alpha is that short from the 38 fib. Actually, no. So I'll go through all 3 because I just realized there is a couple of things that change. Alpha is a short from the 38 fib, that supply zone. So I've just used the supply zone for the stop. I have front run the 38 fib a little bit with my alpha line. You can see it's a whopping 12.85 to 1 risk reward. Now I've targeted 20,300. I think it's, what exactly did I put in? Yeah, 22.99. The reason I've done that is, even though this sort of 19,600 level is where I'm actually targeting, 20K is a big round number. There might potentially be a lot of buying pressure there, and so I don't want to get front run and miss out on those profits, so I'm quite happy to target that level. In terms of tags, pretty standard, 4-hour EQ, 38 fib, supply zone with my high time frame bias. That's always an important one. 6 confidence. I was tempted to up it to 7, but I don't love the 38 fib, so I kept it at 6 and very happy today. So that is what we're looking. Oh, don't do that. Are you sure you want to submit? Just let me cancel. Yes, cancel. Beautiful. I was worried I was going to click the wrong one there. So from Bravo, now eagle-eyed viewers will notice that Bravo, the supply zone has changed. The reason for that is the supply zone is actually basically just there, in my opinion. But I don't want to see price get up into this region where that wick was before, stop me out, and then continue down. So even though it's going to halve my risk reward, even potentially less. In fact, let's see, because I would love to see what the risk reward is from here. So 36884 for my stop, 36884. That's going to give me a huge 22 risk reward, which is fantastic. But I would rather play it a little bit safe and still get my 10 to 1, which is awesome, 37444. And just feel a little bit more confident in, not necessarily getting stopped out if price does push up there into that area. So in terms of tags, there is a 4-hour EQ that is here. That's the 4-hour EQ right there. Let me just change that to white. There's the supply zone and there is the 50 fib. So everything else is pretty identical to the tags from beforehand. So we can leave that one as is. And then finally, the trade from Charlie, which again, short. All these are for 1% risk because they agree with my high time frame bias. There's no conditions. It's just if price gets here, I want to be short. I've done a similar thing in terms of my stop loss. So rather than putting it just on the other side of the zone, there's sort of a 4-hour supply here and a 4-hour supply there. So I've run it just above the middle one, which covers sort of the entrance to the final one, just to give myself a little bit of breathing room. I've tagged refined zone here because I've gone from a daily zone to the 4-hour zone within it, which is what we're talking about in terms of last week's video, where I was talking about that 4-hour zone within the daily, and that was where price did head. So I've tagged refined zone because I like to see when I've refined those zones and how they play out. But everything else is pretty similar to those other 2 trades. The only thing that's changed is the target. Sorry, I forgot to mention that for the 50 fib. So with the 50, I am the 50. So the short from Bravo, I'm targeting this 24k level, and with this short from Charlie, I'm targeting this 28k level. Now the reasons my targets change is the higher up we come here, the more buyers we're seeing, and so then when we come, or if we come back down, the earlier I potentially expect to see buyers step in on that next move down. So if we come right up to the 61, then I'm not going to be as bullish, as confident in my 19k target. Whereas if we only get to the 38, let me get rid of this drawing. If we only get to the 38, then we reject. I would feel not super confident, because I do think this 24k level is a pretty reasonable level, but I would feel more confident in that 20k level than I would if price came way up here and then had to come all the way down there. So that is why the targets change on those 3 trades. That's it from me for this week. So hopefully you guys got something in this video. Hopefully you learned something. Hopefully you can apply some of these lessons to your own trading. Let me know how you went last week. Hopefully you stayed out of some of that blood. I know that what happened with Luna could be potentially pretty devastating for a lot of people. So hopefully you guys are all doing all right. If not, feel free to contact me. I have been burned in this market multiple times. I'm sure I'll get burned again. It's part of the game. But if that's really messing with your head, reach out. Take some time off. That's always one of the best things to do. I was talking to a friend last night who, he got hit, not too bad by Luna, but he has taken some big hits in the market. And he was talking about how much he loves just getting off the computer and then just playing with his son. He's got a son to be 9 months now, and he just remembers, this stuff doesn't matter that much. And it can really consume you, right? Money is such a big thing for so many people, myself included. I've had some big psychological issues with money. I probably still do. It can really, really mess with your head. So if you're finding it's messing with your head, get outside, do something different. Exercise is always my go-to, meditating, all that sort of stuff. But just remember, you probably still have loved ones. You probably still have people who care about you. There's all those sorts of things that go into it. So if you are struggling, reach out 100%, whether it's to me, whether it's to, Lifeline, one of the organisations. If you're not in Australia, I'm sure there's organisations wherever you are. Reach out. It will get better. It's not... Losing money in the market doesn't make you a loser. I think that was my biggest issue early on. I felt like a loser every time I lost. It's not the case. It doesn't change who I am. It doesn't change, my value as a person. So always remember that stuff. But that's it from me. Have a great week. Happy trading, and I'll talk to you guys very soon.